Good morning, everybody, and welcome to the European crossover webinar. And welcome to an NFP Friday. If we go and get ready to see what, or get prepared for today's trading. I haven't even updated my Reuters thing, so I don't even. We're still on yesterday's. Just have to reload that. Well, we'll go and move on to the charts to see how we want to go on and basically set this up for today's trading. Trading NFP is like totally different, than other reports. Most people say, it sets a tone for the month going forward. So let's go on and move into the charts. We'll go on and scoot on over here to euro dollar. And while we're doing that, let me just go and reload my Reuters. Just a second. Okay, let's just go and take a look at that real quick, just so we have an idea of what everybody's looking for. Okay, so last month's was 142. They're looking for 180. Manufacturing is supposed to come in a tad bit weak. So last month they were down 9K, looking for down 5K. Don't care about government payrolls. Don't care about private payrolls. Average hourly earnings. Last month it was flat, and now they're looking for a gain of 0.2. I think this is going to be key. I think they are expecting it to gain. Obviously, 0.2 and even 0.3 would really, the market would view it as cementing, even though it's not really cementing, but cementing, rate rise in December, which would really get the dollar kicking. Average work hours, 34.5. Labor force participation, I really don't give an F about that, although people make a big deal about that. But really, it's always just the same ones that want to kind of undercut the numbers. And really, it doesn't matter whether you believe in the numbers or it's just the idiots that do that, because the market's going to trade the way it's like the fake A numbers out of China. I mean, those are the only numbers they can trade with. You see what I'm saying? So you still see the same losers always calling out the numbers, and this is fake and that's fake, and they don't make a damn thing. All they sit on sit on Twitter all freaking day and just try and throw pot shots to all the numbers. Just a bunch of losers. So the non-farm payrolls are looking for 180. Last month is 142. One of the things that will be key, we'll look for any back month revisions. Obviously, if it's revised up, will be key. We'll have to see on manufacturing payrolls, but I don't think that's going to weigh as much. on the market, and average hourly earnings will be key. So obviously the headline number, back month revisions, this is what I would focus on. Obviously headline number, back month revisions, average hourly earnings. That's where I look at it. F participation, that means nothing. So let's go and move into the charts. So I said yesterday, I figured the dollar would be bid into the NFP, leading into the NFP, and also be bid into the print. I did short some euro dollar in the Asian session at 89, but I had already covered. I actually had a limit, and so I was already covered by the time I woke up. Just see if I can catch a few nickels. I was thinking, if it comes up here, at 89, I thought, that's decent price. If I have to hold this sucker and it works against me, so freaking be it. Because like I said, my whole thing is that the euro dollar will work lower. It's nothing against the euro dollar. It's just that everything's set up in place and has set up in place for us to move lower. And what I've termed a less concerned fall in the euro dollar. So everybody's kind of pretty much got on board. One of the things I try and stress on, like when I say a theme. Years ago, when I would just follow the stock market, let's say we'd be coming into terrible numbers or had terrible numbers, and I'd say when the market would get on whatever theme it was, I'd say this is bogus, this is a bunch of BS, because what about this, what about that, what about this, what about that? But the stock market is the one that really once it latches onto a theme, it goes with that theme. So this is the way lots of times when I talk about a theme, sometimes I reference, like when I'm looking at some bank research or whatever, but it's more than that. It's how I think that the market chooses to go. So what happens is, like, let's say that the overall stock market, when they say, yeah, earnings look good, earnings look good overall, and the market starts moving that way, and you'll see some companies, you go, oh, that number came out crappy. Now they're going to really fall. And then it does, you see a minor pullback, and then the market keeps reasserting itself over the next few days. And because that's the theme that everybody's buying into, whether you want to believe it or not, it's not a matter of whether it makes a whole lot of sense. That's the theme that they're looking at. So it's basically, in that analogy, it's like a glass half full. So they're going to look at everything on the positive side, and anything that's slightly negative or negative is just going to be downplayed a little bit, and they're going to accentuate the positives. So it's the same thing that I've been arguing here in the euro, and the same thing even up in here when I say the theme has changed. The theme, more like I said, isn't just how I think the market looks or if there's some bank research. It's how I think that what's driving the market and what the market's inclined to believe. That was the same thing here when we broke this 1283 on the way up. The market was okay. Now they really squeezed the bears, and now we're going higher, and no one was going to fight it because you're going to have to work off this, situation here and let the market run. And no one was going to get in the way. So it's kind of like, so to speak, on a very ultra short-term perspective, that was the theme. So they were going to let the market run. And until it got up to some very lofty levels, that's when you could go and initiate shorts. And, I tweeted out, hey, I'm selling it right here. I think I sold it at, 1475 or 1474, something like that. And I go, this is a great area. Someone asked me, hey, how far can it go? And I go, well, I definitely don't want to see it get on a 2-hour close about 1520, but I really think we're really overdone. And so that was on a very short-term basis, that theme that, hey, they really caught the bears flat-footed. They're going to have to squeeze higher. You're just going to have to get the hell out of the way until you come to a very good level that it looks like the market's quite overdone. So in the same token here is this whole idea that, Draghi, looks like he's finally grabbing some traction with this announcement of, the additional or expected additional quantitative easing, expansion of the balance sheet, the extension of the program. So everybody's kind of going in that direction. So it's it's very easy, like I said, a less concerned fall for this market just to slide. It's not begrudgingly sliding and then whipping back real hard. You're just sliding and you get a little bit of a rally and everybody is happy to step on the other side, and then we just push it down. And as I said, then we come to areas where the market is probably just going to settle, and then we'll start and then drip lower and maybe rally a little bit. So let's move on to what we think is going to happen, and not things, but how best to kind of set yourself up for today's action. So let's move this out. So I think the number is going to come in decent. It might even come in better than decent, and that's why when I was shorting the euro dollar in the Asian session last night, and I got a pretty good decent price. I was pretty patient. I was even willing to short it in the euro session towards the end. I thought, no, just wait. They'll probably give you a little bit better level. They might even make it up here to 109. But I bet they'll come right back down. So when I got a chance to short up there at 889 or 888 and a half or something, 888 point something, I took it, and I just put a limit about I think around 70, I think it was. But anyway, just enough just to catch a little bit. I thought, you know what, I wouldn't be surprised if I'm out by the time I wake up. I woke up in the middle of the night and I was already out. They had already hit my limit. So I think there's a good chance, depending on how the number comes out, that we'll exceed this 819 and dip sub 108. I think my idea is I think that the dollar will look to take a respite. It may sit down here for a while, but I think the market's a little bit overdone. I mean, if you look at this perspective, as much as we've fallen, we got a pretty good rally. We faked some people out pretty good. And then we got a very nice extension down here. And now we've kind of sat here. So it looks like you're getting an area of valuation where people aren't willing to press it too much further. So I think another dip down here, and I think you'll get some decent short covering. I mean, you can even go along the euro, intraday, but I think it will sit down here for a little while. And then maybe we'll start to even up some positions. Ultimately, like I said, I think we're going to come down to 756. We can even overshoot a little bit towards the 728. But I think this is where we're going to ultimately go. If the number comes in weak, here's the deal. Even if the number comes in weak and they say, oh, the Fed can't raise in December, you'll see a rally. But I don't think that it's not like it was back here, where when the Fed can't raise, the euro takes off like a rocket. I think that what happens is you offset some of this oversold condition, but the what would be perceived as the inability of the Fed to raise in December just really plays into what they're talking about, what they're pushing with the ECB, or what the market is looking at, which is a risk-on environment. So ultimately, the Fed will raise. The economy is doing very well overall, and people like to go and throw some tomatoes at some weak numbers, and nothing's perfect. I mean, unless it's if the market if we're getting 100% great numbers, everybody says the numbers are fake. And then what they say, that's what I'm saying, you can't listen to these losers because they don't even know how to trade. They don't even know what the F they're talking about half the time. So if the numbers come in great, consistently across the board, they're fake. And then if the numbers come in slightly disappointing, then all they do is they hammer on whatever is a bit of a negative divergence. Or if it comes in a surprise weakening, man, they go all crazy. I mean, basically like they have their own version of a wet dream. They go crazy on Twitter. Really, I'm looking to start to cut back and not follow some of these people because it's the same old crap. They offer no value whatsoever to my stream. So anyway, getting back to this is I think that even if you get a bad number, I think that, okay, you'll probably get something like this. and then we'll meander around and eventually we'll come back down here for another extended move. This, I think, will ultimately play out overall. Because even if the Fed, even if the number were to come, I mean, unless the number comes in disastrous, but now that the market has turned into this where they're going to go and seek the risk-on environment, or they've got this risk-on environment, I think that it even makes it still plays into the case for a weaker euro, because then if the Fed isn't going to raise in December, the perception they have to price that out, then it still lays the groundwork. It reinforces the Fed's conviction, not the Fed, the ECB's conviction to do the additional quantitative easing. That's why I think that even if we get a rally, short cover rally, it'll come back up here and probably stay up here for a little while, but it's probably only going to it'll probably do something like this at best after we sit there, and then we still reinsert the downside. That's what I'm saying. It's not so much I'm anti-euro. It's just that I think that it's like I told you, that cup, the glass half full. It's like even if the number comes in weaker, you'll see some short covering, but it plays into what the Fed scenario is. So it's more important on a day like today to have an idea of what the overall theme is and not just the levels. Now, getting back to the levels, I think that on a good number, we're probably a decent number, not a fantastic number. Fantastic number, we're going to go really south of the border. But on a pretty good number, we'll probably take out the 8 and probably dip down here to the 795-ish, go sub 108. Then we'll probably gather ourselves, and then, it could dip into the 780s. And then we'll probably start to work back up as this market's oversold, and you would target this 840 or in the 830s. And obviously, if we go higher, if the number comes in weaker and they're offsetting some of these shorts, then we're really going to shoot up here for 929, right up here like the 930s. I do have a resistance. I think it was coming up at 948 on the 30-minute, I believe. Well, we can take a look at that. Actually, that one was still good. But anyway, so we'll go and take a look here at the 30-minute. The thing is, and I keep harping on that, but every weekend I say, it's time to go on and what I call it, cull your Twitter list. And seriously, if someone's not providing you any value on your Twitter list, you ought to be just getting rid of them. Because I don't know about y'all, but I'm not. I'll be on. I get a few good laughs on Twitter and stuff like that. But I'm here. I'm all about. Well, yeah. John says you're probably referring to Zero Hedge. Well, actually, Zero Hedge blocked me because I said a couple of things. Really didn't say anything. I've just chided the guy a few times or chided them. It's not one particular guy. But they got ticked off, and they blocked me about, I think it was about 2 months ago. Same thing, because when they say stuff, it's not that. It's just some other people, too. The same old crap, just like that old fart Rick Santelli. He's worthless as tits on a bullfrog, like my dad used to say. He's such a loser. He talks a big old game and a lot of smack. Then he gets on that GOP debate and then turns out to be a pussycat. I don't want to even hear anything that guy has to offer. But no, I'm saying is you're here to make money. Yeah, you can, if you want to follow a couple of people for some good laughs, that's fine. But if people are spewing the same old crap all the time, and they really offer you no value whatsoever, unless you want to look at it and say, I'm gonna follow this guy or this girl because they're just funny and they talk about whatever, then great, do that. What I'm just saying is, at some point, you get people singing the same damn song and really no value whatsoever. I would just freaking unfollow them. It's up to y'all. Do what you want. So anyway, let's go on to the euro dollar. and this is on the 30-minute. So we've got this 925, which is a 38% of 834 to this most recent one of 1073. I mean, obviously, we can look at the huge, bigger move, which is 834 to 1495. But, you know, I don't think the way the market's situated right now, I don't think it's going to be necessarily about fibs. It's going to be just all about levels, because I think this market eventually just wants to work lower. It's just if we get a bad number, how high can they take them? Now, I got this zone here of 939 to 960. You know, if the number comes in flat, I mean, they may just, if the number comes in kind of expectations, I think it's going to be real jiggy in the sense, when I say that, I mean that it's going to be, they might try and spark it up real big above 9. If the number comes in like expectations, the market pushes it one way or the other, they might go to above 9 to like 912, then turn around and hit new lows. And they go, I think it's just going to be kind of in that situation. If it comes in what they believe are expectations, you could get a reaction like that. My thinking is that it's going to be, the dollar's going to be bid into the print. So chances are they'll try and push it. But it's better off, I mean, just you can come in the way you want. I mean, I would have been, if I'd have still had my short here from 889, I'd just kept it. I just screw it. I know eventually we're going to go lower. I think the number is going to come in okay. And if it comes in okay, they'll probably push it lower, and I'll cover, you know, on the print, because I would expect a lower number, okay? Because I think overall we're going lower for, you know, down the road, so I wouldn't be that worried about it. Right now, I mean, I'm already out of that position, so there's no sense on me just to go and throw an order in there just for the sake of throwing the order in there. But even on a rally, I think it's going to be limited. I think that this whole area from 939 to 960 is, you're going to see some shorts being taken place, being put on. We can push even higher, maybe eventually get up here to this 974, but I think you'll see a lot of volume right in here if we get up there. I mean, obviously, all things, you have to, you know, how's the number going to come out? I don't even think the number's going to come out. Even if it came out kind of bad, I don't even think it's going to come out that bad. The problem is that if the number comes in weaker, it just reinforces what the ECB is looking to do, which is extend and expand the balance sheet. So it just reinforces that. So that puts back pressure to go lower. So I wouldn't be surprised if you want to look at that area of it, because like I said, trading NFP is totally different. I mean, if it rallied up here into this 930 area, I think I'd just be going and start putting on shorts, because what could ultimately happen is we sit up here for just a little bit, and then we just start heading lower and lower and lower. And that's why you have to go in and factor in a lot of scenarios. Sam says, what are your thoughts on equities, please? Yeah, we'll be glad. I'll be happy to go and look at that. So anyway, so that's my thoughts here on the euro. I mean, like Blake always makes an excellent point every time. He always says, no one knows what the number's really going to go and do. And that's true. We have no idea. It used to take me a long time to try to get past that. But it's true, because if you accept the idea that you don't know for sure how the number will come out or what the play is, then you open yourself up to looking at more possibilities. Like, what if it does this? And what if it does that? What if it does something else? So that's what I'm saying is you could get a number that is mildly, okay, we'll just go and do this one real quick. We could get a number that's mildly positive, and I think this is important because it sets you up. More than the numbers, you have to have a strategy on what you think is maybe going to happen. If we get a number that's a little bit better than consensus, we could go like this. Then I told you that I think we're going to offset this, and obviously there'll be some jiggling up in here, but eventually we go like this. And everybody's saying, and I mean, I don't think it's going to go straight line, but I'm just saying this for example purposes. So everybody's like, yeah, now we're getting this, going to get this short covering. Who knows? Maybe we're going to 10.15, at least 9.50, and then we might just do this and start sliding back down. And then everybody's like, whoa, wait till next week comes. We're going to go to newer lows now. That's what you could ultimately see. So I would not. You do what you want. I would not be, if we get a dip here and the euro begins to recover, I would not be trying to say, well, I definitely want to be short, and I'm going to wait till it gets to 110. What I would suggest is, you do what you want because it's your own risk parameters, but I would already start to put positions in this area because, and then once again, like I said, it's just going to reinforce the theme. That's what I'm saying. It used to drive me crazy years ago when I look at the stock market. I'd say, okay, so now they believe that there's going to be these great earnings. And I'm like, oh, look, this company reported bad. Okay, that's into that story. And it kind of like step back and then keep moving higher. And then another, we'd have like a couple of numbers that came in. Let's say one or two numbers came in good. They take off. And then a couple of numbers came in mediocre. And they kind of sit there. And then one number came in bad, it dipped. And it still keeps moving higher because they all the market in general bought into that theme. And once it buys into that theme, it's hard to turn it around. And that's what I think we are with the euro right now. And it just makes the most sense. So if you get really what's helping the euro is the idea that it's the risk-on environment that it can reassert itself back to the funding currency. Once again, you hear these people, there's not much difference. You know what, you're right, there's not much difference, but guess what? The market's buying into that. You see what I'm saying? I'm interested in what the market's doing. I'm not trying to stand in front of this locomotive and acting like I know more than everybody else. Look, go with the way the market is. I mean, if you want to fight the stream, you go ahead and fight the stream. I'm not going to fight the stream. I'm just going to go with the current and trade it that way. And that's all I'm trying to espouse is that even if the number comes in okay or still slightly worse, it's ultimately just going to go and reinforce the theme with the ECB that they're going to extend and expand additional quantitative easing. So I think that's the way you got to look at it. So let's go and move into the dollar yen, and then we'll move into the SPOOs and equities in general. So we already talked about the dollar yen, and I've been saying this, it goes back to the same thing I've been telling y'all about this theme, because remember back home, this whole area, it did look like it was going to break down, but as we started to break down, I told people, watch out, 1882 is very good. We saw this 1882 and the market bounced like crazy. Some people took the trade, be honest with you, I think I only caught a little bit, I mean a micro bit of it. I didn't see any of this happening, but a couple of these people took this trade, and they made a pretty doggone good chunk of change. Because this turned around, I think it was on a Friday when this happened. So, but my whole point was this whole idea which we went about yesterday, and I'm just trying to reinforce it. The idea that the Bank of Japan would announce additional quantitative easing, at the end of October. But now they're back on this kick that now that we're on this risk-on environment that they're going to do that in January. And I told you we can pull back, but I tell you what, I wouldn't be playing this game because I tell you what, this thing wants to move higher. I said that you got to be careful playing with this tiger. So we're still here. 2210 still huge. Well, it's a 61%, but 2214 is a big level. We'll scoot this back out. You can see this coming across. But I think, like I told you yesterday, I think there's a good chance we can shoot on a good number past 2250. Maybe we'll run out of gas somewhere in here, and I do expect the dollar to, like I said, take a respite. So you could see this market pull back. But I tell you what, you got to be careful because if we see, hang on. If we see the dollar start to assert itself intra-session, and we were talking about that with the euro dollar. So if you start to see this move, we get up to 22.48, and then we start pulling back, and we go sub 22, we start moving down here, and compare this to the euro, getting up to the 930s, 940s, and then the euro starts kind of find its footing to make a move lower. Then we can see this thing come right back up, and then it's going to be freaking scary, because then everybody's going to say, "Wow, the dollar's just going to go on and take off. It's reasserting itself," and then it could get scary. And that's what I'm saying. It's not a matter of saying this is what will happen. You have to factor in these scenarios, because if you were to see that and the market goes sub 22 after, it rallies up here towards 22.48. It goes sub 22, and it's floundering here at 21.80, and then you see the euro. You see the euro in the 938s, 945s, and it's running out of gas. And then you start to see the euro starting to slide and it looks like the inklings are gathering some momentum. And then you start to see the dollar yen go, man, you just want to go with the dollar because then they could do something like that. And so you want to factor in all these scenarios because what it means is obviously if you factor in, let's say, 3 scenarios, obviously, in all likelihood, two of them are going to be wrong. But the thing is, you're not going to be surprised. You'll be prepared, and you'll say, whoa, I see this happening. I see this developing. Wow. If I'm long the euro, then let me get out of my euro. And maybe if I'm aggressive, whatever, maybe I'm going to just start shorting the euro right now, or I'm going to start buying dollar yen because we did get this rally. We're sub 22, and now it looks like it's starting to kind of like hold its own, and euro is already starting to slide. You know what? I see a lot of things happening now. The S&Ps are starting to move higher. Then you would be ready for that and be able to go in and profit from that. So let's go and move in here into the SPOOs. It's actually time for break. So we'll go in and take a look at what's going on in the SPOOs as soon as we get back. I think it's more important to have a general strategy on how you want to trade on NFP as opposed to specific levels. You should already know all the levels. You covered all the levels. That's what we do here in the show. But I think it's more important to know what the overall theme is, and this will go in and help you how you want to play. Trading NFP is totally different, and it does set the tone for the market. That's why it's so important to know how to manage those levels. Okay, everybody, welcome back to the European crossover webinar. And Sam asked if that's Oasis. Yeah, it's Oasis. That's my favorite band. I listen to a lot of stuff. I like jazz, but not that fake jazz like Kenny G, that fake pansy jazz, elevator style jazz. But anyway, so we're going into the SPOOs right now. I think this is interesting. I still believe, you know, I talked about this 2092, was it early in the week or last week, and I was looking, you know, for a pullback. And we saw a very nice 25 handle pullback, actually a little bit more than that. And then this market reasserted itself and it looked like, man, we're going to run out of gas, so we try to push further. I think we're pretty much about as far as we can go on this. They may be able to squeeze up here to 1475. And we'll take a look on a 4-hour chart to see if we can see what this looks like. And this would be 1475 over here. So let's move this back here. So this is 1475, and you can see this is pretty key. You see that? We've talked about this. We talked about the 9250, and I gave you all this example. Remember down here, and you know how well that worked out. Like I said, you know, I wasn't even up at that time, I told y'all, but when I had gotten up, it was already pulled back. It was at 88, and I said I was looking for this market to go, you know, lower, and we had a very nice pullback that took us, you know, beyond 25 handles altogether. Even if you got, you know, short at that time. I mean, like I said, I primarily just day trading scalps, so I didn't take the position to hang on for any great length of time. Danced around in it a couple of times, but as I mentioned, for those who hold it longer, they were able to go and take advantage. Even if they caught only half of that stuff, that's still 12 handles, even if you only caught half of it. So anyway, getting back to where we are, here's the 1475, and you can see the significance here. Okay, you get basically a top. Yeah, it overshoots, but you know, who cares about that it overshot? You're looking at the significance of it here. So here's the top. You pull back. They challenged to 1475. They took it out by maybe half a handle, and they pull back. And wow, do they pull back? We go all the way down here into the 50s. That's pretty hella big. Okay, so then we come up off here, and we fall short of 1475. Pull back down into the 70s. We come up, once we get above 1475, we pull back to find support at 1475. You see this one here and here. And we go up here, and once we go through 1475, it slides like a knife through butter. Same thing here. We got a very nice battle zone here. See that battle zone here? Actually extends here. And once again, the battle zone. So the same way that I showed you how 2092 was very key, and you know, if nothing else, hopefully at least you weren't getting long in that area, you know, that time. Obviously, if you were selling and shorting the market, you did very well, exceptionally well, I think, in a lot of everything. So this is what I think, that the market is stretched here in the SPOOs. And, you know, if you look at this area, you know, where we've come from, I thought the 92.5 was going to basically bake it in the cake for the SPOOs. And we did go and pull back, but it, obviously, like I said, it reasserted itself. But even though it's reasserted itself, we haven't been able to really, you know, take off and put a new leg up the way we've done over here in certain key areas. So I think the upside is quite limited. Above that, we have 1175. I mean, if you were long, I would definitely already be taking stuff off at this 1175. But 1475 is really key here. And these are levels that I have from way back when. It's just not, I'm not, here, I don't think putting on the Fibonacci, once we hit this key area, and actually 2100 was the 88% of the move, I don't think there's anything to look at here, like to take this high, this low, project this into a Fibonacci. Although you can, we'll do that, but I'm not putting that much significance in the way, because the market's come so far. I think it's about the main levels. This might be like 127%. We'll take a look. $21.10 3/4 would be 127%. I think the S&P will be at higher highs going into Christmas for the Santa Claus rally. But I still think we have to go in and work lower. So any rally up here, I think that those that are long are going to use this as an opportunity to get out. That's what I think is going to happen. How aggressive you might want to be, necessarily shorting it, that's up for you to go and do. For me, I don't really see anything here. I'm going to go with the probabilities, and I'm going to be trading, you know, euro, and I feel more comfortable trading that. I mean, I felt good about the SPOOs when they're up in here, but I think that this, just today's rally, if we get that rally, I think this is a more of a great area. It doesn't mean it's going to turn around and reverse immediately, like this same day. But I think going into next week, I just think we start to work lower, because I think this is a fantastic area for a lot of big firms that have been long. From, let's say, here, and I'm not saying down here, from here, here, they have like 75, 85 handles. Think of it from their perspective. And so they've got like, you know, let's say 50, 75 plus handles. Hang on. And so if these guys have these kind of gains, then I think that the upside is rather limited. So any run up here is a fantastic area for them to just go in and take off their longs. That's the way I see it. You know, see it the way whatever you think is best for your style. That's the way I look at it. So I think that in light of how far we've come, And I just can't see it. I can't see us getting above 1475 and have a sustained break. I mean, I said the same thing about 1950. We haven't seen what you'd call a sustained move. And when I say a sustained move, not the idea of it just gets up here and sits up here like a bump on a log, but that you hang another leg on it. This is what I talk about when I mention a sustained move. I've just said that with the euro too. Is that, you know, then you get above it and then you actually are able to go and launch from there. I mean, you can sit here, but you're able to go in and start adding on to the gains. Doesn't mean you launch like, you have to launch like a rocket, but that you get up here and you start moving higher. And this is what I was saying about the 9250. I didn't see a sustained move up here, and we haven't done a sustained. We've held it, so you can say sustained in the sense that we've held above it, but not sustained like another leg up. And I just can't see that past this 1475, and I can't see it even for the 9250. Because let's say you got short from 9250. Or let's say, you know, we rally back up here and you go, wow, that makes a lot of sense. I'm selling at 9250. Then where are you right now? You're flat. You're not even down a handle. You're not even down a quarter handle right now. Here's 9250, and here we are, 9250. You're going, wow, I had my feet to the fire a little bit. I mean, I really believed in that 9250. Okay, you can get out for flat now. Just pay the commish. The point I'm trying to make is, we're just not seeing that sustained move, and I really don't believe we can get past 1475. So people that are long from down here that have, you know, 50, 75, 100 handles, the big guys, I think this is a great area to go on and exit out on the rally up here. I think the next week we'll head lower, and I still believe in this 46.75. So let's go and move into gold. And I talked to you, I told you about 240, and guess where we went to? 240. When we were trading here in the 15s that day, and we were dipping below, I said the next area of interest is 7. We got into the 5s, so you're underwater for about $2, but we rallied up to a little over 10. Then we came back and retested, and we got all the way up to 11. And I said the next area is going to be 240. See that right here? And I think the low is 220. And where are we at now? 750. So gold's kind of tricky in the sense that I think the move is really all over. I mean, that's easy to say after this, but you know, I've seen some idiots talking about 1030 and stuff like that. They don't know what the hell they're doing. I mean, they just throw up these stupid arbitrary numbers. Doesn't mean we can't move lower. I think that ultimately gold will move lower. But how the hell does that help you? So the next key level that I see here is 89.50, 89.30. That's right here. Now we can still move even lower than that, which is 10.95. Which so it'd be 10.95. The way I think the gold is going to play is kind of like what I said about the euro in a sense. I think that they could push them here, and it's like what I talked about also about the euro, a less concerned rally. I don't think anyone's going to stand in the way. So gold's tricky in the sense that I think we can go sub 1100. I just don't think that there's much juice left down here because you've really killed everybody off here. So you could see a quick dip, and then you could actually, I believe, start to see, here's where I think the theme will change. We could see a dip, whether we go sub 1100 or not. Then, sure as the sun comes up, you're going to start to see this talk about, well, gold's going to have a bid because we're going to be coming into the holiday season, and maybe not a bid, but it's definitely going to be supported because holiday season, they're going to be buying jewelry. I mean, think about it this way. I mean, gold's on sale now. So people have an opportunity to go in and buy it at a cheaper price. So there's definitely going to be support as you go into the holiday season. Well, there is some, you know, truth to that. So I think that any moves talking about going much lower are not likely. Doesn't mean that it can't. Let's say that we broke and you're like, I thought you said this. I'm just saying you're trying to play the probabilities, and they just don't add up for another extended leg lower as we come in, as we eventually roll into December. And this market is extremely oversold. Now, if the market had been trading like this, Yeah, then we could go on and break much slower. But look where the market was here. It's fallen through the toilet. So now that it's come through the toilet, now I see these bozos talking about 1030. You know, now that it's fallen, $60, $70. Now they want to talk about lower. So I think that, you know, we'll see how NFP comes out. But I think that even if it works lower, there's gonna be some support down here with the idea that you'll see holiday buying, blah blah. So I think that it is going to be supported. I would question any legs down here. If you're looking, well, what are we looking at? Then it'd be 1095 and 89.30. I just don't even know if we could even make it down here to 1095. This market is just so overdone. But look at it. You've got some great value here. Look at all this. The volume in here from really 1107 down here to 1080. Look, that's a big chunk of volume here. Big chunk of action. That's a lot. So this would be 1095. I mean, if it gets down there, I think, you know, I just don't see another leg lower here now. Doesn't mean we can't move lower, and no one's going to stand the way as it takes that dip. But I just don't think that there's anything left. And then you're going to have a fundamental factor, which is when we move into the holiday season, there will be a bid under gold, especially after it's fallen so far. I think next week will probably, depending on how it acts, over the next couple of weeks we'll probably see some very nice day trading action in gold. Over the next couple of weeks. That's what I'm saying. You don't even have to put yourself in the way of the freight train. You can just wait, and as the market finally starts to bottom around here, then you can start to participate in some nice day trading action. You don't have to be the one, you don't have to play Matador. Matador defense, as you say in the NBA. I mean, Matador in the sense you're going to stand in front of the bull, although it has a different meaning in the NBA. But